Good morning, everyone. This is Mike Paulenoff from mptrader.com, January 31st, 2010, with your Charts of the Week update. We're starting today with a monthly chart of the EWZ. You can see the candlestick chart goes back to mid-2006. Each candle represents a month's worth of action. This is a very long-term chart, and I've chosen this because I want to illuminate certain things. Number one is that the candlestick chart itself provides information to us just by looking at it. Okay, the white candles, if it's a white candle, you just know that the close of the month was higher than the open. It wasn't necessarily an up month itself above the prior month, but it tells you that that month you had an accumulation of stock on the way up that drove the price up because the close of the month was higher than the open of the month. Conversely, like the month of January right here, you know, because it's a colored body, that the close of the month was below the open of the month. And that just tells you that it was a distribution month. Didn't have to take out the month before, but in this particular case, not only did this candle, the January candle, take out the low from December, it took out November and October as well and closed below all of them. So this was clearly a very destructive month because it violated 3 months worth of action. Number two, it was a destructive month because it closed right on the low. All right, this body is really large, and not only is it large, the close is right here, and the low is in this little nub. If we enlarge it, is in this little nub down here. So the low was 64.32, and the close was 64.69. So you close virtually on the low, which tells us, amongst the devastation in here from taking out the lows from the prior months, that there's downside continuation, especially when it's confirmed by a momentum on a monthly basis that's rolled over. So the monthly momentum is pointed down. The candle is a broad, large distribution candle, big red body. So where could this go now? Well, before I tell you where it could go, let me tell you that this is not as bearish a situation as it could have been. Keep in mind that this candle shows that the high for the month, which was here, did not take out the high for December. Now, in a strange sort of way, that's a positive sign for the EWZ. Why? Because had you made a new high and then reversed, then what you have had was a major downside reversal, a key downside reversal in bar chart parlance, and a major bearish engulfing pattern on a candlestick basis. That said, this is still a nasty chart, but for me, the likelihood that this is a major decline that starts a bear market in the EWZ is less likely than this is a correction in this bull move in the EWZ. So we look at the EWZ and we say, well, should I be looking to dump the EWZ, or should I be looking to perhaps allocate capital to the EWZ? Well, this chart suggests to me that this is a correction, so I will be looking for a possible window of opportunity to buy the EWZ in the days or weeks ahead, perhaps even months, based on the monthly candle. I will know that because I will identify areas. For instance, the differential between the 36-month moving average, which is here, and the 12-month moving average, which is here. That's, by here I mean 36 and a quarter. I mean 63 and a quarter, and 57 and a half, or 57.75. That's a window. That's a window I will be looking at. And while it's considerably below where we are now, it is nonetheless a window of opportunity if I think this chart is telling me that the EWZ is in a correction. And right now, that is what it's telling me. You can't go near this now. I wouldn't step in front of this now. There's been a lot of damage. But I will be looking for significant accumulation somewhere in the 60 to 58 target zone in the upcoming weeks or months.